All right, hello, and welcome back to the Broken Business Models podcast. We are your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer: nothing in this podcast or any of our other material should be taken as investment advice. James and I could have positions in any stock we may mention today, and we reserve the right to change those positions at any time. So make sure to always do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be a very small company called Safety Shot. So Safety Shot, if you haven't heard of them before, basically what they do is they've developed and sell a canned drink, which they claim you can take it when you're out drinking out for a night of drinking to reduce your blood alcohol level. And the idea is that you can reduce your blood alcohol level so you're safe enough to drive home or whatever. The problem is that there have been no formal independent studies that back up their claims that it actually is effective in reducing your actual blood alcohol level. They have done their own, what they call a study, where they claim that it was in fact effective, but independent people who have tried it and measured their blood alcohol over the course of hours or whatever after taking the Safety Shot have not found any effect, any extraordinary effect on their blood alcohol level reducing after having a few drinks and then taking Safety Shot. Despite the questionable validity of their claims of the efficacy of Safety Shot based on independent reviews, they're highly promotional, trying to pump up the ability of their product to actually reduce your blood alcohol level to the point where they've gotten in trouble. At one point, they said they were involved in some promotional partnership with the Coachella Music Festival, and Coachella actually sued and came out with a scathing response saying that they have no relationship to this bogus company and product. So when it comes to their financials, Safety Shot is basically a failure of a company. They've never made more than $1 million of revenue in a single quarter in the recent past. In fact, they're losing many millions of dollars, between $5 and $10 million, sometimes even more than $10 million in just operating losses per quarter. Because of that, they've had to rely on dilutive equity raises to fund their cash burn. In the last quarter, they sold almost $5 million of stock. Also, in the last quarter, they only made $42,000 of total revenue. So obviously a huge failure of a company, especially recently. Now, despite their failures as a money-making enterprise, they have recently announced some interesting transactions. They acquired a company, and they have a interesting relationship with the Tron cryptocurrency. So with that background of Safety Shot, I'll kick it over to you, James, to talk about some of these more interesting dynamics that they've been involved in recently.
Yes. So just on this past June, so a couple weeks ago, they closed an acquisition where they acquired a company called Yerbe. And Yerbe makes plant-based energy drinks. So Safety Shot is going to be acquiring them and, including selling their Safety Shot Scam drink, which they claim can reduce your blood alcohol level. They're also going to be now selling this Yerbe energy drink. Now, upon, Safety Shot has released various press releases trying to hype up this acquisition of Yerbe, saying how great it's going to be. And specifically, they say that as a result of this acquisition, the combined company's annual revenue is expected to increase by more than 1,000% in 2025 as a result of this acquisition. And well, that sounds good by itself. We're going to increase our revenue by tenfold. But as Ryan explained, the reason that they're going to be able to increase their revenue tenfold is because the starting revenue was so low to begin with. So yeah, it is a tenfold increase from an extremely low base because, as Ryan explained earlier, Safety Shot itself only made $42,000 of revenue in the first quarter, which is almost nothing. Now, Yerbe was a publicly traded company before it was acquired by Safety Shot. So we can look at their most recent financial results. So in the first quarter of 2025, Yerbay generated $1.2 million of revenue, which was a significant decline of approximately 15% decline versus the prior year. So their Yerbay's revenue is shrinking. And in the first quarter, Yerbay incurred an operating loss of almost $3 million. So their operating loss was, more than double of their revenue. So Yerbay, it's a very small company that is declining. Its revenue is declining, and it is incurring huge operating losses. So yes, it is perhaps true that Safety Shot's reported revenue will increase by more than tenfold in 2025, but that's a tenfold increase from a base of almost nothing. And this Yerbay company they're acquiring is really small, actually, only generating $1.2 million of revenue per quarter and is losing a huge amount of money. So let's look at how they paid. Let's look at the details of the Yerbay acquisition. So this was structured as an all stock acquisition. Now, as of the end of the first quarter of 2025, Safety Shot had 75 million shares outstanding. They issued 20 million new shares to acquire Yerbay. So Yerbay shareholders will receive 20 million shares of Safety Shot. Now, the acquisition only closed on June 27th, but the terms of the transaction were agreed on January 7th, 2025. And at that time, Safety Shot's share price was 74 cents. So the nominal value of Yerbay in the acquisition was only $15 million. And the reason why Yerbay was willing to sell themselves to Safety Shot for such a low price was because Yerbay was itself basically a failed company that was incurring huge losses. Now, in addition to this 20 million shares that they issued to acquire Yerbay, they also had issued some additional shares in private placements to raise capital. So by the time the acquisition closed on June 27th, 2025, Safety Shot's total shares outstanding increased to 108 million shares. In addition to that, they also have a bunch of options and warrants outstanding that can convert into more common shares. However, the conversion price, the exercise price of these warrants and options are, well above $1. Currently, Safety Shot's share price is only 50 cents. So these are massively out of the money. So we can sort of ignore those for now. They also had, as of June 27, 2025, they also had $5.25 million worth of convertible loans outstanding. So after the Yerbay acquisition, they had 108 million shares outstanding, plus these other warrants and stuff. Now, in addition, when they acquired Yerbay, Yerbay also has its own debt. And when they acquire Yerbay, now that debt is moved onto Safety Shot's own balance sheet, and Safety Shot is liable for Yerbay's debt. They have, various tranches of debt, most of which are coming due pretty soon. So of Yerbay's debt, the biggest piece is, $4 million worth of convertible debt, which as a term of the transaction, the holders of Yerbay's convertible bonds can request that Safety Shot needs to repay the principal balance within 90 days. So within 90 days, Safety Shot may be required to pay the $4 million of principal. They also have some various other loans. Some of them, this one matures in January of 2026. There's this other one that is payable on demand. So the lender, on any day tomorrow, they could say, we want this money back. We want the principal back now. And then there's also a couple of these other smaller loans. But in total, if you add up all of Yerbay's debt that Safety Shot is now acquiring, It's $5.8 million of debt, most of which is going to be coming due pretty soon. So Safety Shot's going to need to come up with, millions and millions of dollars to pay off all of Yerbay's debt. Now, in addition to this Yerbay transaction, there's also another significant thing that has another significant development for Safety Shot. Now, back in 2023, Safety Shot's predecessor company, spun off another company called SRM Entertainment. So, from what I understand, Safety Shot's predecessor company used to own SRM Entertainment, and then back in 2023, they spun off SRM Entertainment as an independent company. Now, SRM Entertainment was a kind of a then it listed on the stock exchange itself. It was sort of a failed penny stock company that made some toys and things like that. But recently, in June, SRM's share price skyrocketed. And the reason it skyrocketed is because they announced this transaction with Justin Sun, who is the founder of the Tron cryptocurrency, where Justin Sun would invest $200 million into SRM Entertainment, and they would use that money to become a Tron treasury company, where SRM will just, use that money to buy a bunch of Tron tokens, and then SRM will basically just be a publicly traded holding company that owns Tron tokens. And they also changed their name and ticker symbol to Tron. Now, we actually made a video about this whole SRM Tron thing on our main channel when it happened. So if you're interested in learning about the details, you can click the link in the description below to watch that video we made about it at the time. But the fact is, Safety Shot had this incredible windfall because when they spun out SRM Entertainment as its own company, they retained a few million shares. So as of March 31st, 2025, Safety Shot still owned 2.35 million shares of SRM Entertainment, now Tron. And now, as a result of this, crazy Tron thing, the share price has increased so much that their shares in SRM Entertainment, now Tron, are actually worth quite a bit of money. So that is actually quite a windfall that Safety Shot has received. So now let's look into the details of Safety Shot's, shares outstanding and how much cash they have and how much their Tron shares are worth. So as of June 27th, 2025, that's immediately following the closing of the Yerbay acquisition, they had 1.8 million shares outstanding. Subsequent to that, they issued an additional 1.84 million shares in some private placements where they sold shares to raise capital. And then also they had Safety Shot had $5.25 million worth of convertible bonds outstanding. They exchanged those for, they issued 15.9 million new common shares in exchange for those convertible bonds. So if you add up all of those together, as of the time of recording this video on July 20th, 2025, their share count has increased to 126 million shares. Now, so they have 126 million common shares outstanding. Now, how much cash do they have on their balance sheet? Well, as of the end of the first quarter, they had $329,000 of cash on hand. Subsequent to that, they raised $1 million from private placements, so selling stock. And they also, remember that they owned 2.35 million shares of Tron. They've already started selling those. So to date, they've already sold 1 million of those shares, generating proceeds of $5.625 million. And they sold, so they had 2.35 million Tron shares to begin with. They've already sold 1 million. So currently they still own 1.35 million Tron shares based on the current trading price of the Tron shares, that those remaining shares are worth $14 million. So if we add up all of those, including the value of the Tron shares they still own, their total liquidity is $19 million. Now, they're currently burning cash at a rate of approximately $5 million per quarter. So in the second quarter, if we assume that they burn $5 million in the second quarter, by the end of the second quarter, that'll bring their cash down to $14 million. And then, as I just described a couple of slides ago, they now acquired approximately $5.8 million of debt from the Yerbe acquisition. So and most of that debt's coming due pretty soon. So after paying off that Yerbe debt, that'll bring their cash balance down to $8 million. So even despite having this little windfall from these Tron shares that they happen to own, that money is going to be eaten away pretty quickly by their cash burn, as well as the Yerbe debt they have to pay off. And while they had been burning cash at a rate of approximately $5 million per quarter, remember that Yerbe itself is also losing money. So now that they've acquired Yerbe, their rate of cash burn is likely to increase. Yerbe is incurring operating losses at a rate of $3 million per quarter. So if we have Safety Shot's pre-existing cash burn of $5 million per quarter, and then we also add on Yerbe's losses of $3 million per quarter, the losses of the combined entity are likely going to rise to $8 million per quarter. So they're going to run out of cash very quickly. Probably by the end of the third quarter, they will have already run out of cash and will need to continue doing dilutive equity issuance to raise more capital. And as Ryan explained towards the beginning of the video, Safety Shot has always lost money. So they have relied on dilutive equity issuance to raise capital and stay afloat. And we can see that, pretty much every quarter, the number of short shares outstanding increases. Now, as a result of the Yerbe acquisition, and as well, and the that conversion of their convertible debt and all the stuff we talked about previously, their number of shares outstanding has exploded, has increased massively since the end of the first quarter. And given the high rate of cash burn, the company will likely have to continue issuing new shares going forward, which will, we believe, result in the share price continuing to decline. So Safety Shot is obviously a failure of a company. Their original product, their beverage that they claim can reduce your blood alcohol level, which is almost certainly BS, that has been a complete failure because there's very few people who are dumb enough to actually believe their claims. So almost nobody's going to buy their Safety Shot drink, which is basically a scam. And then they acquired this money-losing Yerbe company, which is also losing a huge amount of money, and its sales are declining. So just by acquiring another money-losing company, all Safety Shot's going to accomplish is actually accelerating their rate of cash burn, which will require them to accelerate their pace of issuing new shares to fund their cash burn. So that wraps it up for about everything we had to say about Safety Shot. If you have any opinions or thoughts about the company, please let us know in the comment section below, and we will see you all in next week's video.